So what is the difference between hire purchase system and installment system? The procedure is same. In today's session, we shall solve a problem relating to journal entries in the books of installment purchaser. What they have given in the problem: installment purchaser is Mr. Chandan, installment seller is Hero Honda Company. Interest suspense account. Now what you are going to write for this account? What is the amount? So if you add all the interest of all the 3 years, hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the second session of Unit 3 of the subject Financial Accounting 1, and this is for first SEM BCom student. So your Unit 3 is all about accounting for installment system. So already we have discussed few of the concepts. So let us quickly recall what we have discussed in a previous session. So in a previous session, we have learnt about meaning of installment system. Now what is this installment system? So there are two parties, buyer as well as the seller. So who are the two parties under installment system? That is seller and buyer. So these are the two parties in installment system, that is seller and buyer. Now what the seller will do? Seller transfers the goods to buyer, and buyer on the delivery of that particular goods or asset, so he will make some percentage of amount which is known as what? Down payment. That is percentage of cash price. That is the total percentage or certain percentage of the cash price. For example, if the cash price of the asset is 10,000, so he will make 10%. That is on the delivery of the goods, he will make payment, that is 10% of the cash price, that is 1,000. So remaining 9,000 will be given to the seller in the form of installments. So the remaining 9,000 will be paid to the seller by the buyer in the form of installment with interest. So here it includes principal plus interest. So installment is nothing but what? Principal plus interest. So that 9,000, that the remaining amount to be paid by the buyer to seller will be made in the form of installment along with interest. So this is what happens in case of installment system. Here what happens? So what is the difference between hire purchase system and installment system? The procedure is same, but only thing is that here once the seller transfers the goods to the buyer, ownership transfers immediately in installment system. So here the ownership of the asset or goods transfers immediately. That is, on the date of agreement itself, the ownership will transfer from seller to buyer. Whereas in hire purchase system, ownership will transfer only after the payment of last installment. So this is a difference. This is the main difference between installment system and hire purchase system. Next, we learned what are the features of installment system. So if you know the meaning of installment system, you can go on writing what are the features of installment system. Next, difference between hire purchase system as well as installment purchase system. Just now we have discussed, so the main difference is relating to the ownership. Next, format of journal entries in the books of installment purchaser. So in a previous session, we have learned what is the format. So here, like hire purchase system, we also have to prepare journal entries in the books of installment purchaser as well as installment seller. In the same way, ledger accounts in the books of installment purchaser as well as installment seller. Now, here or in the previous session, we have discussed about the format of journal entries in the books of installment purchaser. In today's session, we shall solve a problem relating to journal entries in the books of installment purchaser. Today, we shall solve a problem on journal entries in the books of installment purchaser. Now, go through this problem here. On 1/1/2008, so they have given the date 1/1/2008, Mr. Chandan purchased a motorbike. Now, the asset is what? Motorbike. And who is Mr. Chandan? He is an installment purchaser, because he has purchased that particular asset. So, Mr. Chandan purchased a motorbike from Hero Honda Company. Now, what is this Hero Honda Company? It is an installment seller. Now we know who is the installment purchaser and who is installment seller and what is the asset they have purchased. On installment system, the cash price of the motorbike is rupees 40,000. Now what is the total cash price or the value of that motorbike? That is 40,000. So cash price is how much? Cash price is 40,000. Now let us see in installment system how they are going to make the payment. So 40,000 and the payment was to be made as follows. Rupees 16,000 is to be paid on signing the agreement. That is on the date of delivery of that particular asset. He has paid rupees 16,000, which is known as what? Down payment. Now how much down payment he has made? 16,000. Now what is the remaining amount? That is 24,000. Right? So the amount payable in the form of installment is 24,000 and they have told this 24,000 has to be paid in 3 equal annual installment. Now if you divide this 24,000 into 3 equal annual installment, so each installment is how much? 8,000 each. So each installment is 8,000. Clear? So in each installment, he has to pay 8,000. So this is a principal amount. So along with principal, he has to pay interest also. So this is principal plus interest. So 8,000 is principal. Along with that, he has to pay interest in each installment. Next, 3 equal installment together with 5% interest. So what is the percentage of interest to be paid? That is 5%. Next, Mr. Chandan, that is installment purchaser, writes off depreciation at 15% per annum. Now what is the depreciation? Since he has purchased the asset, that is installment purchaser is having the asset. So for each and every year, he has to calculate the depreciation. So what is the rate of depreciation they have given? 15% on original cost. So original cost in the sense, we have to follow calculation of depreciation under straight line method. So here depreciation will be same year after year. Next, prepare journal entries in the books of installment purchaser. That is, we have to prepare journal entries in the books of Mr. Chandan. Hope you are clear with the problem. What they have given in the problem? Installment purchaser is Mr. Chandan. Installment seller is Hero Honda Company. So here Mr. Chandan have purchased an asset, that is motorbike. So the total cost of the asset is 40,000, out of which on the date of agreement, he has paid rupees 16,000 as down payment. Remaining 24,000 what he has to pay, so he will pay in the form of 3 equal installment. So in each installment he has to pay 8,000 each along with interest. So what is the percentage of interest? 5%, and he has to calculate depreciation for asset for all the years and the rate of depreciation is 15%. So here depreciation is calculated based on original cost method or straight line method. So this is a problem. Now we shall draw a table. I think you are familiar with this table. We have already calculated in hire purchase system. So this table is drawn in order to calculate what is the principal amount, what is the interest, what is the installment and what is the depreciation amount for all the years. Now, so your format is date, particulars, amount, principal, interest, installment and depreciation. Now, when did the asset was purchased? So, asset is purchased on which date? 1/1/2008. So, write that date. So, what is the cash price of the asset? They have directly given here 40,000. Write this 40,000. Less. So, on the date of agreement, he has made or he has paid 16,000 as down payment. So, deduct that down payment. Less down payment 16,000. So, what is the total amount payable? So, total amount payable is 24,000. And this 24,000 has to be paid in the form of equal installment where each installment should contain 8,000 rupees each. Right? So, when this installment is being paid at the end of that particular year. So, end of 2008 is 31/12/2008. So, we are making the first installment. So, this 24,000 has to be divided into 3. So, 24,000 divided by 3, how much you'll get? So, 24,000 divided by 3, so you'll get 8,000 each. So, we know the principal amount. So, this 8,000 is what? This is principal amount. Now, So we know 24,000 has to be paid. Now we are making the first installment. Write the principal amount first. That is 8,000. Now calculate the interest. So what is the amount payable in the beginning of first year? That is the amount payable in the first year, 24,000. So 24,000 into what is the rate of interest? 5%. So 24,000 into 5%. So we'll get 1,200. Now what is this? Interest. Now add principal and interest. So we'll get installment amount, that is 8,000 plus 1,200. So 9,200 is the installment to be paid in the first year. Now come to the second year, that is we are making the installment, or we are paying the installment amount at the end of second year. So that is second installment. So end of second year is 31st/12/2009. We are making the second installment. Now what is the amount to be paid in the second installment? So in the first installment it was 24,000, out of which we have paid 8,000. So 24,000 minus this 8,000. So the remaining amount, or the amount payable in the second year, is 16,000. Now come to the principal amount. We know the principal is 8,000. So it remains same for the 3 years. Next, calculate the interest. So what is the amount payable in the second year? 16,000. 16,000 into rate of interest, 5%. So what is the interest? 800. Now add principal plus interest. So we'll get the installment amount. That is 8,000 plus 800. So we'll get the installment amount in the second year, 8,800. Now come to the third year, that is last year, 31st/12/2010. We are making the third installment. Now what is the amount payable in the third installment? So in the second installment it was 16,000, out of which we have paid 8,000, right? So 16,000 minus 8,000. So the amount payable in the third year is 8,000 rupees. Now, so we know the principal amount to be paid in the third year, 8,000. Calculate the interest. So what is the amount payable in the third year? That is 8,000 into 5% interest. So we'll get 400. Now add this principal and interest. That is 8,000 plus 400. So the installment amount will be 8,400. So this is how you are going to calculate principal, interest as well as installment. Now come to the depreciation. So what they have told in the question, depreciation has to be calculated at 15% per annum on original cost. That is on straight line method, we have to calculate the depreciation. Now what is the cash price? What is the cash price of the asset? 40,000. What is the percentage of depreciation? 15%. Now first year calculate the depreciation. 40,000 is the cash price into 15%. So we'll get 6,000. Whereas in second year also, since we are following straight line method, depreciation remains same for second year also. That is 6,000, and third year also 6,000. So this is a calculation of depreciation. So here depreciation is calculated on straight line method. Now we are done with the calculation. Now it is easy. If you remember the journal entry, so we can go on recording the entries. So we can pick the amount from here and record the amount in the journal entries. Now go through the journal entries. So journal entries in the books of installment purchaser. Now who is the installment purchaser here? It is Mr. Chandan. So Chandan is the installment purchaser. So in his book, we are going to record the journal entry. Now what is the first journal entry? That is for purchasing of asset. Second is for making the down payment. Third entry is for interest due. Fourth entry is for installment paid. Fifth entry is for depreciation. And sixth entry is for transfer of interest and depreciation to profit and loss account. So in your first year, you have to record these 6 entries. One is for purchase of asset. Second one is for making the down payment. Third one is for interest due. Fourth one is for installment paid, and the fifth one is for depreciation charged, and the sixth entry is for transfer of interest and depreciation to profit and loss account. Now coming to the first year, when did we purchase the asset? So on 1/1/2008. Now we shall start with recording the first entry. So when did we purchase the asset? On 1/1/2008. So record this date, that is 1/1/2008. So record the entry for purchasing of asset. So what is the entry? Asset account data, interest suspense account data, to installment seller account. So here there is a new account to be opened, that is interest suspense account. Whereas in hire purchase system, what was the entry? Asset account data to hire seller account. Whereas here asset account data, interest suspense account data to installment seller account. So this is for what? Asset purchased. Now what is the asset here? In this question it is motorbike. So either you can write asset account or you can write motorbike account data to motorbike account data, interest suspense account data to installment seller account, being asset purchased on installment purchase system. Now what is the amount for asset account? The cash price of the asset. So what is the cash price? That is 40,000. So record this 40,000. Next, interest suspense account. Now what you are going to write for this account? What is the amount? So if you add all the interest of all the 3 years, so the total of interest, that is 1,200 plus 800 plus 400, that is how much? It is 2,400. So the total of all the interest of 3 years to be transferred to interest suspense account. So how much? 2,400. That is the total of all 3 years interest. Next, to installment seller account. So who is the installment seller in this question? That is Hero Honda, right? So to installment seller account, being asset purchased on installment purchase system. So if you add these two, you will get 42,400. Hope you are clear with the first entry, that is for asset purchased. So what is the entry? Asset account data, interest suspense account data to installment seller account. So for asset account, you are going to write the cash price of the asset. For interest suspense account, you are going to add all the 3 years interest and you are recording the amount. And to installment seller account, so add asset account as well as interest suspense account. So the total will be transferred to installment seller account. Now come to the second entry, that is for down payment. So on the date of signing the agreement, that is on the date of delivering the goods, so here the down payment is made by whom? By the installment purchaser. So what is the entry? Installment seller account data to bank account, being the down payment made. Now what is the down payment made? That is 16,000. So record that amount, 16,000. Now come to the end of that particular financial year, that is 31st/12/2008. So what is the entry? It is for interest due. So what is the entry? Interest account data to interest suspense account, that is first year interest. So interest account data to interest suspense account, being the first year interest due. Now what is first year interest due? That is how much? 1,200. So this is first year interest due. So write this 1,200. Next, your fourth entry is for installment paid. So what is the entry? Installment seller account. So installment seller account data to bank account, being the first year installment paid. Now who is the installment seller here? Hero Honda, right? So installment seller account data to bank account, being the first year installment paid. Now what is the first year installment? It is 9,200. So record this 9,200. Next entry is for depreciation charged. So what is the entry? At the end of the first year, depreciation account data to asset account. Now what is the asset here? Motorbike account. So you can write to motorbike account. Now what is the amount of depreciation in the first year? That is 6,000. So here, since we are calculating depreciation on straight line method, so in each year depreciation will remain same, that is 6,000. So write this 6,000. Now come to the next entry, that is the last entry. So transfer the interest and depreciation to profit and loss account. So what is entry? Profit and loss account data to interest account to depreciation account, being interest and depreciation transferred to profit and loss account. Now what is the first year interest? It is 1,200. And what is the depreciation? 6,000. Now add 1,200 and 6,000 and the total has to be transferred to profit and loss account. So interest is 1,200, depreciation is 6,000. So the total is 7,200. 200. Now we are done with first year. So in the first year, we are having 6 entries. One is for purchase of asset, and the second one is for down payment. Third one is for interest due, and the fourth one is for installment paid, and the fifth one is for depreciation charged, and the last entry is for transfer of interest and depreciation to profit and loss account. Now come to the second year. So at the second year, we are not having 2 entries, that is purchase of asset as well as down payment made, because we have already made in the first year, right? Now come to the second year. In the second year, so your first entry is for interest due. So entry remains same, interest account data to interest suspense account being the second year interest due. Now what is the second year interest? That is 800. So record this 800. 800 in the debit and 800 in the credit. And the next entry is for installment paid, that is second installment paid. So what is the entry? Installment seller account data to bank account being the second year installment paid. So what is the second year installment? That is how much? 8,800. So record that amount. Next is entry is for depreciation charge, that is end of second year. Depreciation account data to asset account, or you can write depreciation account data to motor bike account being depreciation charged. Now what is the depreciation? As I told, since we are following straight line method, depreciation remains same. So in the second year also it is 6,000. So record that amount, that is 6,000. Next, last entry is for transfer of interest and depreciation to profit and loss account. So what is the entry? 31/12/09 profit and loss account data to interest account to depreciation account. Now what is second year interest? So second year interest is 800. What is second year depreciation? 6,000. So interest is 800, that is, and depreciation is 6,000. So we have to total it. So we'll get 6,800, which has to be transferred to profit and loss account. Now come to the last year, because the installment has to be made in 3 equal installments. So we are done with 2 years. Now come to the third year, that is 31/12/2010. So what is the entry? So you don't have 2 entries, that is for purchase of asset as well as making the down payment. So we'll start recording the entry from interest due. So your entry will be interest account data to interest suspense account being third year interest due. Now what is the third year interest? So third year interest is how much? 400. So record that amount. 400 in the debit and 400 in the credit. Next is for what? Installment paid. So what is the entry? Installment seller account data to bank account. So your date will be end of third year, that is 31/12/2010. So being third year installment paid. Now what is third year installment? That is 8,400. So record in the both side debit and credit 8,400. Next, as usual, you have to record entry for depreciation 31/12/2010 depreciation account data to asset account, or you can write it as depreciation account data to motorbike account. So in this problem, asset is motorbike being depreciation charged. So as I told you, your depreciation remains same for all the 3 years. So it's 6,000 once again. Next, transfer interest and depreciation to profit and loss account. So 31/12/2010 profit and loss account data to interest account to depreciation account. Now what is the interest in the third year? That is 400. And what is the depreciation? 6,000. So transfer this 400 and 6,000 to profit and loss account, that is 6,400. So this is a simple problem. Only thing is that you have to remember the journal entries properly. So remember, in the first year you are having 6 entries, rest all the years you are having 4 entries. So in the 6th year, first entry is for asset purchased and second entry is for down payment, third entry is for interest due, fourth entry is for installment paid, fifth entry is for depreciation charged, and sixth entry is for transfer of interest and depreciation to profit and loss account. Rest all the years, so you will start with interest due, next installment paid, depreciation charged, and transfer of interest and depreciation to profit and loss account. So this is a simple problem. Only thing is that you have to know how to draw that table and do the calculation, and you have to know the journal entry. Once you are familiar with calculation of that particular table, so it's very easy that you can take the amount and put in your journal entries. So in my next session, I am going to solve a problem relating to ledger accounts in the books of installment purchaser. So today we have discussed about journal entries in the books of installment purchaser. In next session, we shall continue with ledger accounts in the books of installment purchaser. My dear students, hope you have understood the session. See you all in my next session. Till then, take care. Thank you.